Hello, everybody, and welcome to this panel today on building a seamless fiat on-ramp experience through open banking, brought to us by our sponsor, TrueLayer, who we're very grateful to. We're going to kick off now with a quick introduction to everybody on the call, and then I'm going to hand over to Matt from TrueLayer, who's got a short presentation for us before we get into the panel, and later on we'll have some Q&A. But introductions first. Matt, why don't you kick us off?
Thanks. Afternoon. My name is Matt Parrish. I'm a senior product manager at TrueLayer. In case you don't know TrueLayer, we are one of the biggest open banking providers in Europe, processing around 50% of all open banking traffic across data and payments in the EU.
Thanks, Matt. Blair?
Hi there. Yeah, Blair Halliday. So I'm the head of UK at Gemini. For those who aren't familiar, Gemini is a crypto exchange and custodian, primarily founded out of New York, and in the UK for now almost a year now. We're one of the few companies that have received the FCA's crypto asset registration, and we're also authorized as an e-money institution.
Thank you, Blair. And last but not least, Benoit.
Hi, I'm Benoit Marzouk. I'm CEO at Bitcoin Point. So it's like a Bitcoin wallet exchange. That's our main service and product. And I have been using the open banking TrueLayer API for over a year now. And quite excited to be in this webinar.
We're excited to have you, Benoit. And just a reminder to everyone, please do ask lots of questions in the chat feature on the right-hand side of your screen. We'll certainly try to get to as many of those as we can. I'm going to hand over now to Matt for a short presentation. Take it away, Matt.
Thanks. So if we can just change the slide quickly. So onto the next slide. So, hi everyone. As I said, my name is Matt, and before we get into the panel discussion today, I'm going to spend 5 minutes talking about what open banking is, what open banking payments are, and how you can use them to create a more seamless fiat on-ramp experience. So, if we go to the next slide, when a new customer or existing customer wants to buy cryptocurrency and they're not moving out of their current position, obviously one of the first things they have to do is make a fiat payment to you. If you're a crypto exchange, you'll know there are lots of issues with the way these payments happen today. And all of those issues genuinely come back to the fact that the predominant online payment methods today were designed before the internet came along. So obviously cards were designed for physical purchases and they've become incredibly dominant online, but they're also extremely broken. Fraud rates are high because users have to manually key in or trust a website to store their card details. Transaction fees for merchants are expensive because of all the middlemen, and payments are slow to settle, up to 5 days. That's obviously a cash flow issue for exchanges, but also an exposure issue, especially given the volatility in price of cryptocurrencies. So one quick example, if you look back at Ethereum in May this year, you can see the price rose 37% across a 3-day period. If you'd taken a payment at the beginning of that 3-day period and were waiting for the money to settle so you'd actually purchase Ethereum at the end of that period, you would be significantly out of pocket because of that. So, solutions. In 2018, along comes open banking, and that covers both data and payments APIs. And what open banking allows you to do is connect directly to a customer's bank account via an open API so that you can either access their bank account data or make payments on their behalf. Today, we're focusing on the payments part of that equation. And what that's really done is given businesses a new payment method that has the speed, low fraud, and low cost of bank transfers with the low friction of digital wallets. So what does that mean for crypto exchanges? It means that you can give your customers a new way to make fiat payments that's digitally native with a great user experience, and I'm going to show you in a minute. As a business, you benefit from instant settlement, low costs, and high payment success rates because open banking has strong customer authentication built in. So, if we can move on to the next slide. I think I covered a bit of this previously. It's the next slide. So how does it work for users? Let's take a look at a fiat payment flow. Here's one that Benoit actually made earlier. So as Benoit mentioned, Bitcoin Point are a customer of TrueLayer's, and here's a short recording of their flow based on a customer who banks with Lloyds. Over to the video. Benoit, if there's anything you want to do to talk us through this, that would be great. But what we can see here is a customer selected Lloyds as their bank. Over to you, Benoit.
Sure, yeah. So as you can see, you created an order very quickly. You get sent to your to your banking app. You simply need to confirm the order, the transaction, and seamlessly the payment will be done. So you can see at the top of the screen, you get the notification from Lloyds. And it's as simple as that. So we're a bit different from like standard exchange where you would receive e-money, so like a digital pound. With us, you instantly buy Bitcoin. So you can see now you receive the Bitcoin on your Bitcoin wallet. So it's as simple as that. So that's the flow, pretty much. Up to you, Matt.
Thanks. Now, if you're using a provider like TrueLayer as well to help you with your open banking payments, you can also make payouts instantly too, enabling your customers to withdraw into fiat. This dramatically improves the user experience and reduces your risk, since otherwise customers are having to wait again up to 5 days to receive their money. TrueLayer offers a standard payouts product and also a complete pay-in, account verification, and payout product called PayDirect. So that's a quick 5-minute introduction to open banking from me. I'll hand back to Ryan now for our panel discussion.
Great. Thanks very much, Matt, for that. I guess what we want to do is sort of frame, why this matters and why crypto firms are potentially excited about this newer form of on-ramp. And to do that, I think it would be useful to frame the discussion by sort of establishing the state of play. So, what's the standard method through which crypto businesses are currently topping up wallets or exchange accounts or whatever it may be? And maybe I'll put that to you, Blair, since we haven't heard from you yet. How are you doing it?
Yeah, look, I think for us, certainly in the UK market, there's still certainly a very much a big interest in depositing by debit card. Either by debit card or using the likes of PayPal or Google Pay, Apple Pay. The convenience factor is certainly there, certainly in the Apple Pay, Google Pay side of things, which is probably a little bit quite substantially different to the convenience factor if you're just sending in a faster payment or other such payment where you have to go off, potentially off your app and manually go through your banking process if you're using a provider that doesn't have that open banking API set up. So I think the UK market is definitely very keen still on debit cards in one form or another, but debit cards have certainly evolved a lot since from their primary use to where they are now, and there's obviously an interest in the debit from the debit card providers to kind of reimagine it as a payment tool for the internet and whatever else. So whilst we still see debit card as a primary source of deposit, customers definitely want to use their bank account and transfer that money directly, and having something which enables them to do that without leaving the site is effectively somewhat the holy grail, and is beneficial for the merchant as well, because we want them to stay on the site. And any kind of friction that is added it's certainly not necessarily positive friction. So getting that security as well for the consumer, that the payment is coming from a secure source, that they're in control, is all positive. So debit cards are still king, but definitely seeing a growing interest in transfer of FPS.
Okay, and does that align with what you're seeing, Matt? You and companies like TrueLayer are making inroads, but for the time being, cards are king.
Yeah, absolutely. Cards are still king at the moment. It's obviously the standards, but the evidence we're seeing in the market, not just in crypto industries, but also similar retail trading industries, is that open banking is being adopted very, very quickly. We're seeing kind of around 75% of end users choose open banking, even when they're presented with the choice of Apple Pay and Google Pay, as well as for an open banking payment.
Is that in crypto specifically, Matt, or is that more generally?
That's in a trading vertical. Yeah, so two trading platforms that also offer crypto investment are customers as well. So that is the take up that they have seen.
Interesting. And Benoit, so you're currently utilizing this technology. What were you doing previously, and kind of what got you over the hump?
So the vision of the company was about bringing access for mass adoption. So we started our historical service was to buy at a network of agents. And in one click, you could basically create a transaction and show a QR code to an agent and receive your Bitcoin instantly. So right now we have 27,000 point of sales and 18,000 ATM, standard ATM to cash out. But so the open banking was bringing the same kind of seamless experience, and in 2 or 3 clicks, as you've seen in the previous video, the customer is able, so it's under 1 minute, you can receive Bitcoin. And of course, you can have a similar user experience with Visa or MasterCard, but the fee would be considerably higher.
Okay, interesting. Well, we'll come on to fees and costs a bit later on, but I guess another important aspect of framing the discussion is, on-ramps are something of an obsession in the crypto world, and I guess for some that might seem like a bit of an arcane term, and I guess it would be good to define first what we mean by on-ramps, and secondly, why creating an on-ramp that is pain-free and more streamlined is something that is so of interest to exchanges and other operators in the space. Blair, why don't you kick us off?
Yeah, sure. Look, when we talk about on-ramp and off-ramp, it's when it's what we're kind of referring to there is when you're leaving the dark side of things in fiat and coming to the bright world of crypto. Which I'm sure everyone on the call will agree with. But joking aside, there's obviously still, we live in this world where fiat is very much, the predominant way that people are going about their business. It's the way you get your salary. It's the way you live your life. And we of course envisage a time when crypto becomes even more kind of prominent. But so as things stand, the on-ramp and off-ramp refers to how you transition your fiat to crypto. And vice versa. And in relation to all of that, there's 2 kind of primary ways to do that. Kind of been alluded to. You either look to make a transfer from your bank account, through faster payment or chaps, depending on what the value proposition is, or you look to do that through your debit cards. And I think as we've kind of said before, debit card still remains the most normal way that people will do that. Certainly, kind of up to a value point, and I think people will become very used to using that as their primary payment source because of potentially protections through the schemes and whatnot else, and also that's the natural way that they've kind of gone about their business. And I think with the introduction of the likes of PayPal and Apple Pay and Google Pay, there's an ease to it now that there maybe wasn't previously, where you'd literally have to manually put in your 16-digit number and all the rest of it. But there is an ease factor, but you still have to put those details in previously. But those bits and pieces have kind of made life a lot easier. But I think there's still a lot of people that don't want to use their card. They want to be able to transfer funds directly from their account. And we still see a lot of those, just going into their app and transferring the funds across and utilizing their crypto in that form. And I think in relation to all of that, anything that makes the transition easier for people, more secure for people, that gives them all of the luxuries that they get from an Apple Pay, Google Pay, for example, and other products do exist, of course, but gives them that that comfort and that ease of transition in the traditional kind of bank transfer world. The greater the adoption will exist.
So it's all about adoption and getting people once people have decided they want to get into crypto, then making them comfortable with actually taking the steps to do so. And I guess, Benoit, in a way, your whole business is another form of on-ramp, isn't it? The Bitcoin ATM side of the business.
Yeah, 100%. So our first on-ramp was with physical locations. Then we embraced open banking, and now you have the option as well to do bank transfers through fast payments. So it's not as good as open banking because you have to go to log to your bank account and set up a transfer. Let's say it's sometimes a preferred option for some people because going through the open banking, even if it's super quick, it can be that the bank wouldn't be listed, or it can be that there's like a tiny little issue. So as Blair was saying, the more option or on-ramp you have, the better for the adoption it will be.
Okay, and Matt, can you, we've touched on it already, and we've written about it quite a bit at the blog about the extent to which this form of onboarding is being adopted by the crypto industry. Can you quantify that at all?
Sorry, can I quantify how open?
Are you able to give us an idea of the extent to which this, open banking is being used now by crypto firms in order to, as an on-ramp essentially?
Yeah, I think open banking is very much in its infancy amongst crypto firms as an on-ramp, but it's growing extremely quickly. We're having a lot of really important conversations with people in the industry. We obviously have one of our customers on the call today. We have a number of customers like Luno and MoonPay who are active in the industry, and we're only seeing their numbers go up. So we're at the beginning of that exponential curve, I believe, of adoption amongst the industry.
And with a Luno or a MoonPay or indeed a Bitcoin Point, is it now for them one option of a number of different options that they have that customers can use?
Yeah, it's so I think I can point to MoonPay. MoonPay offer card payments and open banking payments, and it's a choice between card and open banking as when you arrive at the checkout, and we're seeing that percentage that choose open banking going up and up over time. Generally when a user's chosen to use open banking, it's a payment method they trust from the beginning because you're redirected straight to your bank of choice. So instead of being put into an environment with a provider that you don't know, you're put straight into an environment with a brand you trust, which is your bank. And we see that once users have made that first open banking payment, they don't really go back. There's been a lot of references to Apple Pay and Google Pay as kind of the gold standard for debit card usage. And I think one of the great things about Apple Pay and Google Pay is the fact that the only thing you have to remember is what your face looks like or what your thumb looks like. And that's actually the same with open banking. If you have an app, the open banking, and if you have your bank's app on your phone, you'll be redirected straight into the bank's app, Touch ID or Face ID to authorize the payment. You've done two-factor authentication because you possess your mobile phone, and you are passing the inheritance factor with either Touch ID or Face ID, and then you're straight back after you've approved the payment into the crypto exchange. So yeah, so that's although we're really at the beginning of that adoption phase, we've seen that really ramp up very, very quickly in the past few months, especially with the bull market in meme stocks at the beginning of the year in the trading space. I'm expecting something very similar to happen in the crypto space quite soon. So yeah.
So when we talk about the user experience being better with this form of on-ramp, it's essentially what you just described, is it? It's, you know, having to enter less credentials and a speedier authentication process.
Exactly. It's less credentials, speedier authentication process, whilst introducing more security than other methods. Yeah.
And obviously, there's a lot of hype around open banking in the UK and in the media, and indeed we're talking about open banking today, subject to this panel. But from a user perspective, and I sort of open this one to the floor, is it something that they care about? Is it something that they even see, or really are they just being presented with an easier payment option?
I mean, I can take that, but I've done a lot of talking over the last 5 minutes. Benoit, I think you're probably in a correct position.
Well, I mean, they don't really know what open banking means, but if you tell them in-app, so they have an in-app payment option, and they will be redirected to their bank. Yeah, it talked to them, and most of them are able to do the flow we've seen previously. So I think, yeah, they've been used to with other fintech banking app like Revolut. So it's not so new like now. I was there. Yeah, so the crypto industry was not the first industry for open banking. Therefore, people are embracing it, I would say.
Okay. And Matt, you touched a bit on this in your presentation, but Blair, maybe you could lend your insights on this topic. The proposition for crypto firms themselves. Matt touched on the fact that there's instant settlement and therefore less liquidity risk, which I suppose is particularly relevant in a market as volatile as cryptocurrency. You'll correct me if I'm wrong, but can you just explain from an exchange's perspective why those things matter?
Yeah, look, I think it's not too dissimilar to many other firms that use debit card as an on-ramp, and which is that when you receive the debit card payment is made, you don't settle straight away. It takes a couple of days at least for that to clear. And one of the issues, obviously, in crypto is when our customers look to come on board with us, they want to use their funds straight away. And one of the FCA mandated requirements is that that if you're going to use, the funds need to be safeguarded straight away, and you can't anticipate debit card payments, and they've been quite clear on that. So it needs to, if funds are going to be used in safeguarding accounts, they need to marry up exactly to what you actually what is actually held. So in this instance, chats, transfers, faster payments, open banking obviously creates a different situation because the settlement is straight away. And so it's a different proposition. So in that regard, most certainly that instant settlement does provide less liquidity risks. If you have a provider, for example, that is pre-funding their safeguarding account and enabling their customers to use their crypto straight away. If you've got a customer or a company that isn't doing that, then obviously they're getting they're held in situ for a while until until those funds are cleared. So it's just, in that regard, the instant settlement would certainly be a better proposition for the customer.
And does it mean that you don't have to put aside quite as much money to provision for liquidity risk, or is that not the case?
Well, the case would be that the funds would be there straight away. So you wouldn't be anticipating in the same way. So it's the same amount. It's just a different speed.
Okay. We are getting some good questions coming in. We will come on to those just a little bit later. Coming on to cost though first. So I guess that's a very important question. What is it cheaper than using the card networks? I think the answer is yes, but Benoit, maybe you could expand on that for us, exactly how it's cheaper. I think we'd also be interested, Matt, after that, if you could perhaps just explain exactly how fees are levied by open banking providers, because generally speaking, people are working with open banking providers to do this sort of thing.
Okay. Sure. So I won't think about my commercials with TrueLayer, but I would say maybe 70 to 80% cheaper than card payments. That would be maybe the range. I mean, I'm not the expert after for card payments, but yeah, it's similar to the cost of fast payments, FPS bank transfer. So it's reasonable for us. Yeah, that's there was for us we could have had the card payment, but we decided not to do it in order to keep a very competitive fee.
And Matt, coming on to the fee structure.
Yeah. So I think I think Ben was absolutely correct. We see people saving in the range of 70 to 80% on their card fees by switching to open banking. We charge as a scale price 0.6% per payment, and obviously at kind of enterprise levels that goes down subject to negotiation, and that's the cost model that most open banking providers follow. We handle the regulation, the licenses, etc., and charge per payment. So yeah, does that cover things?
Okay. I think so. I suppose we'll find out in the questions section. But sticking with you, Matt, and coming on to security and verification. So you spoke to me before about how this system doesn't rely on a phrase that you use, which is shared secrets, whereas card payments do rely on that. Could you just explain a bit more about that for the audience?
Yeah, exactly. So when you're making a card payment, you're sharing a secret. You're sharing your card number, your PAN, the expiry date, the CVC code, your name, and your address, and all of those things add up to a secret. And if someone takes that away, they can go and use your card willy-nilly, pretty much within the boundaries of the strong customer authentication rules that EU's put in place. Now, the difference with open banking is that we use access tokens, and so when you're redirected to the bank, it follows a really secure OAuth framework called FAPI, the financial grade API standard, and the user returns to TrueLayer after authorizing the payment with the bank with a one-use token, and TrueLayer can only use that single-use token to fire off one payment. And once that's done, even if we, God forbid, were bust wide open and all of our data was strewn across the internet, nobody would ever be able to take another payment from your account after using TrueLayer. So yeah, to me, that's why it's more secure from a technological point of view versus cards. And the other thing is that it makes it harder for open banking, as we discussed earlier, has two-factor authentication built in from the ground up. So when you log into your bank account, you're always asked for two factors to authorize any payment, and that means that that reduces the fraud vectors that can flow through, that can be used to authorize a payment to essentially just take over fraud, where someone takes over both your login credentials and another part of your identity, like your phone or your card and key pin, depending on what you use. So yeah, much more secure.
So if I just may add, at Bitcoin Point, we developed tools to make sure the name of the sender matched with the KYC customer. So there's always layers of security you can add internally to match your needs.
But it is, and I think we talked about this before, it's still possible for fraud to occur using this channel, despite the fact that it's more secure. And I guess it would be useful to just touch on exactly what type of fraud and how that would work were it to occur. Benoit, I think you had an anecdote about this.
Well, what can happen is that we receive a payment from an unknown customer using the account of another KYC customer. And of course, we would block the transfer of Bitcoin on our side. Yeah, then you need to investigate and yeah, do the necessary reports to regulators or to the NCM. That's up to the policy of the exchange, but yeah, it's you always have fraud. Now it's how you block, how you kind of make sure there's no impact for the company or for the exchange, and yeah, you cooperate with the regulator on that.
Yeah, I mean, I think it's important to kind of recognize that there isn't a silver bullet on any of these things. I think, you know, it's important to look at, you know, debit cards, and also open banking, faster payments. All of these things are great ways to on-ramp and off-ramp. You know, they're great ways to kind of determine, you know, as part of your kind of KYC AML program, you know, the source of funds and source of wealth. But one and the other in themselves doesn't stop fraud or money laundering activity, because you know it's all, you know, it helps support how you know your customer, but you're not going to support people that, or stop people that are already kind of have an intent to defraud, and so activity has happened, you know, well beyond or much earlier than you've become aware of. And so I think it's important to kind of look, this doesn't stop that. It's a great way to, you know, to facilitate transfers from genuine customers, but any crypto firm, any other financial services fintech firm, you know, still must have a really robust financial crime program in place, and this can help support all of these new technologies can help support parts of that, but aren't in themselves going to stop, you know, bad actors and illicit activity, because that's a much broader problem.
Because yeah, right.
Sorry, Benoit, go ahead.
Sure. So yeah, just it's not always about someone hacking a bank account. You can have the complicity of the bank account holder who would decide to, for any reason, pretend he's not using his bank account. So yeah, for sure, like you will always have fraud. Now is how the company react and what's its internal policy and procedures.
I wanted to ask you, Blair, you're obviously registered with the FCA on their AML sort of list. You were one of the first companies in the UK to get there. It's been a bit of a saga for many companies. I think even the FCA would have to acknowledge that, having delayed you know, publication of the final register, I think twice now. Do you think, I mean, you sort of just alluded to it there, that, you know, this stuff's not a silver bullet, but it helps demonstrate a commitment to KYC and taking it seriously. You know, has it ever featured in your conversations with the regulators?
Look, I think on all of these things, they want to understand how we understand our source of wealth and source of funds. So, be it understanding all of the technology that we use, you know, and we had to demonstrate all of that when we went through our application processes, both for the EMI and for the crypto asset registration process. So, understanding exactly how customers, you know, how customers' funds are coming onto our platform. It's definitely something that the regulators are interested in understanding. How we use, you know, that not just to enable funds to come on, but how we use that to support our understanding of our customer, you know, in terms of the way that we store bits of information, how we kind of confirm that it's that it's come from an account that we are told is theirs. How we kind of match those kind of things up is really important. So yeah, absolutely. Any adoption of a new payment rail, or a way of getting funds onto your platform, the FCA are definitely kind of keen to understand that, and I'm sure they things like open banking and other technologies are definitely kind of higher up there in their in the way of assessing whether you're competent in doing business.
And that's somewhat relevant to that, although I suppose it's more partnerships than dealing with regulators. But so one of the biggest stories in UK crypto over the past year has been certain banks' decision to block transfers into crypto businesses. The likes of HSBC. Would be good to have them on this panel, actually. But I guess ultimately, a tool like this, an on-ramp using open banking, it has no bearing on blockings like that. You're still not going to be able to top up from an HSBC or another bank that's taken a similar step. Is that right, Matt?
Yeah, that's absolutely correct. So as the easiest way to understand TrueLayer is we facilitate a bank transfer, and if bank transfers are blocked to a certain exchange, then unfortunately open banking will be blocked to a certain exchange. What we do is plug into them and give apps and exchanges instant access to those banking APIs. We obviously can't circumvent customers being able to top up onto certain exchanges, but the thing I would say is that open banking is still in its nascency, and open banking as a kind of checkout-based payment method is still in its infancy. And whilst banks are willing to block bank transfers, they would never, for example, be willing to block a debit card. And what I expect to see is as open banking becomes more and more popular, blocking open banking to a particular merchant will be akin to blocking a particular merchant on your debit card. And fundamentally, as soon as that becomes true, then it's a customer issue and an issue that will hit banks directly in their pockets as end users decide to leave banks. So, yeah.
Do the crypto operators agree with that stance?
What I'm seeing from my company is that we will have some customer opening another bank accounts more crypto friendly, where they can set up a bank transfer in order not to corrupt, if I may say, their kind of main bank account. That said, I don't know if all the banks have like an exhaustive list of every crypto exchanges. But yeah, like maybe the next panel we'll have a bank to speak about it.
Yeah, look, the situation has obviously kind of manifested itself certainly kind of earlier in the year with the FCA's kind of comments in relation to certain exchanges, and banks have obviously certain banks have taken particular actions that they see fit. I think from our point of view, look, we speak to the banks very regularly, and we've got really strong relationships with many of them, if not all of them, and burgeoning. I think to some extent that this will be a temporary situation. I don't think it's it's definitely not a permanent one. But I think what it does do, the industry, we all have to work together on this. There are problems on both sides of the fence and things that we can all work better together on. And it doesn't. It definitely won't work if we're all working in isolation. So, one of the things that we're really kind of focused on is making sure, we're really pro working with regulators, but it's also, it's not just regulators; it's also banks and other fintechs as well. So, I think open dialogue, being honest about some of the challenges and some of the risks, and and looking to work together on this, not putting one's head into the sand. It really does take everyone to work together. But I do generally think that this will be a short-term thing. But ultimately, what's going to come about is the firms that are really taking things seriously, they have a really strong approach to anti-financial crime will become more and more clear. So I don't think there's anything wrong with that.
Yeah, no, it's really interesting. It'll be really interesting to watch it develop, that situation. And I guess lastly from me, we've lost Benoit. Perhaps he doesn't believe in working together. But no, I'm sure he'll be back in a second. Yeah, there's a lot of emphasis, I guess, lastly from me, before we move on to some audience questions. There's a lot of emphasis on sort of getting money in to crypto businesses. But Matt, I know at TrueLayer there are some interesting future use cases involving payouts as well as some other potential features. Maybe you could just run us through like where else can this technology go before we go on to audience questions.
Yeah, absolutely. So I think one of the things that we've been looking at the moment is payouts and how we do payouts. So the functionality that Benoit actually mentioned that he's using to reduce fraud on his platform is something that firstly TrueLayer sorts by default if you use our PayDirect product, and secondly we enable payouts to kind of verified bank accounts after you've made a deposit using our Payouts API. And we found that payouts is incredibly important. Consumers trust businesses that can make instant payouts much more than they trust businesses that take days to make an instant payout. So I think that's kind of where things are going in the immediate future. In the long term, I would love to see crypto wallets become providers that you can make a payment with via an open banking like technology. There's a lot of talk about open finance in the kind of open banking world, and that's taking the concepts that have been proven with open banking and expanding them out to other finance apps. And already in certain PFMs, you can go into a PFM and enter your Bitcoin or Ethereum wallet and see your list of transactions into and out of those wallets. It would be great if we could take that and then introduce effectively like PIS for crypto. So yeah, that's really a direction I see the industry going.
It's a very interesting idea. Yeah. I guess open finance is more often talked about in relation to sort of pensions providers or asset managers or whatever. But yeah, watch out, crypto providers. Okay, well, coming on to some of the audience questions, I guess we'll start at the beginning. So David Simons has asked, how does TrueLayer solve the chargeback/fraud issue for on-ramps? I guess that's one for you, Matt.
Yeah, so chargebacks and fraud it exists within the bank's domain. So essentially the main fraud vector of bank transfers is account takeover fraud, where a user has their account credentials stolen. The bank is responsible for remediating that fraud. So it exists entirely within the bank's domain. It doesn't touch us. It doesn't touch your merchants either.
Okay, and another quick one for you. Do you work in Brazil?
We don't currently work in Brazil, but Brazil is working on some really exciting open banking standards that I'm really excited to see come through. I think Brazil has just released their first open data APIs. It doesn't support PIS yet. So we're obviously beholden to when regulators and banks support this functionality. I'm really excited about Brazil. Massive market, huge potential in South America. We'll be with you eventually.
I guess that's an interesting quick to stop here briefly, Matt. Where is TrueLayer currently then?
TrueLayer is live in most markets across Europe. I'm afraid I can't reel them off on the top of my head because I haven't done that prep. But yeah, the laws that we're based on are based in Europe, PSD2. So it's the UK, which started in 2017, 2018, and then Europe, where the rule came into force on the 16th of September 2019. We're also building in Australia, where there are similar rules, and we'll look to be live in whatever market open banking's live in.
Okay, well, there's quite a few questions for you here, Matt, so we'll work our way through them. So David has another one. Can you verify customer identity through TrueLayer without resorting to asking them for their government-issued ID? And will that be sufficient KYC in the eyes of regulators? pros and cons of doing verification together with PIS?
So I'm not a compliance person, and I think the KYC and AML requirements and how you verify your end users very much a decision for each individual business to make, your risk tolerance, and what levels of due diligence and verification you're doing on each user. If you make, we do offer some forms of individual verification. So if you make a payment to TrueLayer using PayDirect, when we receive that payment, we'll see the end user's name and their bank details, and we can verify your name based on what's coming through from there, because that's essentially asserted by the bank that sent the payment.
Well, from my experience, the regulator would ask for some customer due diligence, and that might not be enough.
Yeah, just to follow up on that, this would form part of your due diligence process, depending on how you use it. If you use us, get a customer to verify some kind of, like, for example, micro deposits or whatever else, so it would only be part of that. So I would definitely encourage anybody to they're going to use this as a KYC tool to very closely read the JMLSG rules, because I think that will make it pretty clear that wouldn't be enough.
Blair, working with card networks as a means of on-ramp, I mean, they will also have, I assume, quite stringent due diligence requirements for partners, will they?
Yeah, well, look, there's many different kind of components to that. I mean, so for us, I mean, we're at the kind of receiving end. We're not an issuer, so we use an acquirer who acquires the transactions on our behalf. So there's many kind of different parts to that. We have, as part of our mitigating the risk of impersonation fraud, we have different kind of methods in place to request our customer to basically to help us understand whether they're in control of that card or in control of that account, and that can be via a variety of different ways. Some are very old, like micro deposits and the like, and others are slightly different. So again, this all kind of comes down to the fact that this is part of the way that you understand who your customer is, but in of itself, it isn't enough.
Okay. Lorenzo's question is, what are KYC and AML requirements in order to use TrueLayer? But I think you've sort of answered that, have you, Matt? Unless there's anything else you'd like to add.
Well, I don't think I did answer that, but look, we do run a compliance process on crypto exchanges. We ask for evidence of AML processes, IC security, bank statements, their own due diligence on your end users. And we already work with a number of crypto exchanges, so we know how to work with you. Luno, MoonPay, Ramp, and Revolut are obviously big crypto firms that we work with. So yeah.
Nick Webber has a couple of questions again for TrueLayer. Does TrueLayer's open banking product work for all fiat currencies? And if yes, is the speed of transfer from the origin bank account to the destination bank account the same for all currencies? And perhaps I'll let you tackle that one before I reel off this.
So, does TrueLayer work for all currencies? In theory, yes. In practice, we're limited by the banks that we support. So right now we have the ability to work in GBP, Euros, Polish Zloty, and I'm afraid that I can't remember all of the Scandinavian currencies off by heart. And then does the settlement time, does the currency impact the settlement time? No, the currency itself doesn't impact the settlement time, but the payment scheme does. So faster payments obviously settles instantly and, well, most of the time, and then up to 2 hours. In some situations, SEPA credit settles within a day, SEPA instant settles instantly, and the other payment schemes have their own rules. We're working on products that can guarantee payments instantly for you, or possibly fund payments instantly for you in the very early stages of working through how we do that. But if you're interested in instant guarantees and instant settlement, I'd encourage you to reach out. We're happy to have a conversation about how we can make that work.
And I apologise, Nick's second question was actually for Blair, and he asks, is Gemini planning to make open banking an on or off ramp method for its customers? It seems as though you don't currently have that. It's a good journalistic question, Blair.
I couldn't possibly comment, just in case Matt tries to sell to me straight away. But in all seriousness, we focus on at the moment we enable customers to pay by debit card using either debit card directly or Apple Pay, Google Pay. We enable faster payments and chat, SIP, and all that good stuff. We are always looking at new payment options, and yeah, I can certainly imagine a whole bunch coming in the not too distant future. So yeah, so we're happy with what we've got at the moment, but we're definitely exploring some new ones.
Okay, thanks. I'll open it up to anyone who'd like to tackle Janet Jane's question. I'm not entirely sure I understand the relevance, but perhaps one of you will. Or perhaps not. In which case, we can tackle we can tackle Ross Kelly's, which is: do you have the ability to do variable recurring payments with open banking, e.g., dollar cost averaging? I guess probably.
Yes.
You, Matt.
So the answer is not yet, but soon. So variable recurring payments is the next step of open banking. Essentially, it's taking what open banking has currently and enabling it for ongoing payments on any schedule or at any amount that you want. So as an end user, if you want to do dollar cost averaging to whatever cryptocurrency you like, you will be able to within the near future. And it's the thing that I'm really excited about variable recurring payments and how variable recurring payments will change not just the crypto industry, but kind of every financial services industry in the near future. A method that's cheaper, settles instantly.
If I may add, yeah, it would be really great because we now have this feature at Bitcoin Point, and most banks would only do weekly or monthly recurring payments, and only like a few numbers of neo-banks would do daily payments. So I think it would really make sense for TrueLayer to add this feature.
What do you think, Blair? Would that be a potentially impactful way of sort of boosting adoption?
Yeah, potentially. I mean, at the moment, the only thing that's kind of like for like is obviously direct debit, because everything else is is a push payment rather than a pull. So I think anything that gives a little bit more functionality to the pull side of things, which isn't using what is direct debit can be slow to set up. It's definitely something of interest for sure.
Okay, and lastly, and then we would have got through all the questions, so we've done a good job. Marissa asks, is instant payout available? Again, Matt.
Yes, it is.
Well, that was an easy one. Okay, well, look, I mean, in the absence of any further questions from the audience, I guess I'd like to thank all the panelists. It was a really interesting conversation, and definitely something that we at the block will be tracking with interest, journalistic interest. And yeah, if you have any questions, any further questions, I'm sure any of the panelists would love to hear from you after the session. But for now, thank you very much.
Thanks, everyone.
Bye.